Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is brought to you by Backpack Trader. Our goal is to help you become the best version of the backpack trader you possibly can. Speaking of trading backpack style, here's TJ. Well, he's still down in Argentina. He doesn't actually backpack anymore, stays in hotels, Airbnbs, and travels a little more style. But the idea is still the same. The whole concept came from when he was backpacking years and years ago through Europe and doing some trading using internet cafes. Boy, believe that? Anyway, here's an oil trade from this morning after the crude oil report. You see, just a few minutes, short it right up in here, took their profits, in and out, back to backpacking. That's what happened. We want to help you become a backpack trader. Again, it just means lifestyle. I always say you want to fit trading into your life. Don't try to fit your life into trading. You can do okay for a little bit doing that, but burnout, yep, that's what happens. And longevity is not in your future if you try to work 90-hour weeks. Well, here's something that's not going to be a mystery to you. There's not a whole lot going on in the markets right now. Earnings season, nope, not for a bit. Federal Reserve meeting, that's coming next week. However, the markets are locked in this trading range dating back to May 27th for the past 8 days because there are big inflation numbers coming out this Friday. So a lot of just back and forth, okay? And I don't expect that to change anytime really soon, although Target tried to upend it yesterday with an announcement that they're going to have to mark down some of their inventory because, well, people aren't buying it. So the markets tried to get excited about that. They tried to create a reason for positivity in the announcement because they say, hey, inflation must be over if one of the largest retailers in America is telling us that they're going to mark down a bunch of their stuff. Well, my question is this. Target, are you listening? Are you paying attention? Here's my question. And I'm asking this on behalf of, 330 million other Americans. You say you're about to mark stuff down. Okay. You going to mark down gasoline? You doing that? You marking down food? You do? Oh, you're not? Well, we don't care. Okay. We don't care about the knickknacks and the garbage and the crap. We didn't need it anyway. We bought it because we've got so much money in this country. But now we're starting to think about these things. We're starting to pay attention to things that are a little more important, like putting food in front of our family and putting gas in our tank so we can continue to go to work. So unless you're going to mark those things down, we don't care. In other words, as traders and investors, don't be fooled by that news and the outcome from the stock. That's temporary, okay? We are still in a bear market rally. That's the important part. Just like happened over here, just like happened over here, just like happened over here. This is another bear market rally. Okay, go back to 2001 if you've got the patience for a little historical backtracking here. Go back to 2001, and what you will see is the NASDAQ 100, to be specific, had dropped down from an all-time high in early 2000 of about $120 per share and went down to about $35 a year later, March of 2001. And over the next 2 months, rallied 53%. 53%, but that wasn't the low. The March 2001 area was not the low. That's the important part. Post 9/11, markets reopened after the 4-day closing. Stocks got hit for several days, found a low in late September. In the next 2 months, rallied hard. Qs went up another 54%. However, the lows from September was not the low. Okay, that's part of the problem in here is that bear market rallies can do that. They get vicious, they get violent, they trick a lot of people in, they trap a lot of people in. And the odds are that what we're seeing from May 20th is just another bear market rally. A lot of traders and investors around the world, as a matter of fact, it seems like the majority of them lately, well, beside Jamie Dimon from JP Morgan, who is telling us that there's a hurricane coming. And I agree with him, but I say, Jamie, the hurricane's been with us since January 4th. That's the thing. We're in the middle of it now. It's just going to continue for a while. It's not on the way. It's already here. Here it is. Okay. However, it seems like a lot of traders and investors are really pinning a lot of hopes on those May 20th lows holding. And this isn't just a small amount. Okay. This is now a global situation. And all the traders and the investors around the world see this little box. I mean, this is no mystery. This is easy stuff to identify. And everybody's talking about the same thing. When it breaks above the purple line, it's going to run hard and we're going to be all Goldilocks and happy days here again. And I'm here to tell you that while it's possible that the market breaks above these highs, that purple line and the high of June 2nd of 4177, after the Friday inflation report comes out, it's possible the market could break out and up. But if it does, that is not the beginning of a new bull market. That will be a shorting opportunity, because between now and the end of September, at some point, could be next week, could be August 13th, it could be September 25th. At some point between now and the end of September, stocks will be back down to these lows and most likely even below them. Now, is it possible that the inflation numbers coming out Friday morning could be positive? In other words, showing a decrease in the rate of inflation? The experts, the ones that are bullish, the professionals, are really praying and hoping that the inflation rate, which has been coming in at over 8%, is going to drop by half. In other words, down to 4% by the end of the year, and then down to 2%. So here's the playbook they're using, everybody. First of all, how can inflation cool off when you see that blue line, that light blue line? That's the 21-day exponential moving average for the price of oil. The price of oil right now at the previous 30 days on a 30-day rolling average, as of right now, is at the highest point it's been at in 14 years. 14 years, everybody. 14-year highs. Okay, we go up just a little more, and you're going to get a new closing high on oil, a new 14-year closing high on the price of oil. 14-year highs. Okay, how is inflation going to disappear when oil, which is the largest economic component on planet Earth still, is closing in on these multi-year highs? Okay, that's not it though. Okay, look at wheat prices. They're still pretty high. Look at corn prices. They're still pretty high. Here's one that'll shock you. Soybean, new multi-year high right now. Right now that's happening. How is inflation going to cool off with all the commodity prices out there at or near new multi-year highs? Okay, this is a basket of commodities. Ooh, that one's got some nosebleed status going. Here's a basket of agricultural commodities, and it's off its highs a little bit, but still staying very, very elevated. Look at the bond market. This is where the interest rates really start to play in. The 2-year, just a little bit, a shade away from a new multi-year high on a closing basis, okay? The 10-year, a little bit further down, but not too far off of another multi-year high in the 10-year bond as well, okay? There's problems out here. The Fed is not going to be able to solve them with a little bit of an interest rate hike, one and done. So what the big money players are hoping, this is their playbook, okay? Let me show this to you. You got to see this. It's perfect. All right, here's a chart of Federal Reserve open market interest rate changes going back for the last several years. The playbook right now for the institutions, the ones that are bullish at least, and there's a lot of them out there. Again, a lot of them begging, praying, and hoping that these lows from May 20th do hold. But the playbook that they're using right now is 2018. Okay, that's the playbook they're using. So take a look at this. Here is the 2018 interest rate environment. So they raise them by a quarter, raise them by a quarter, raise them by a quarter, raise them by a quarter. Okay, and right here, this is when President Trump had a big public argument with then Federal Reserve Chairman and still current Federal Reserve Chairman Jerome Powell. He said, look, you got to stop raising interest rates. Matter of fact, you got to cut them. Okay, so look what happens. The market believes him, right? Because look, it says right here, President Donald Trump demanded a cut. Okay, and that happened over here. The argument started in December. And the stock market bottoms right after Christmas, December 24th, 26th, and then it goes on a good run. Why? Because they stopped raising interest rates, and then 6 months later, 7 months, in July of 19, they start cutting them. Okay, they cut rates. That's what the market is thinking right now. What they're thinking is that there's going to be an interest rate cut increase next week, and there will be 50 basis points. Okay, they're going to go up 50 basis points on Wednesday. Then they're going to raise it 50 basis points again in August. And then the Pollyannas and the Goldilocks folks think that that'll be it. And they're going to wait 6 months and 7 months. They're going to start cutting rates sometime in the first quarter of 2023. Maybe, but the market's not saying that. The market's saying that they're going to keep raising interest rates. The market's saying that this is far from over. And who do you want to listen to? A bunch of people in a back room with a track record that is just a dumpster fire? Or do you want to pay attention to the market? My vote, right here, anybody? Yep, the market, that's it, wins every single time. That's right, every time. This is your old buddy Romulus telling you that one of the ancient Roman trading secrets, without any doubt, is to listen to the markets. Listen to the markets, everybody. They are not foolproof. Nope. They're just better than anyone else that I know of. That's all. You see, in ancient Rome, the empire grew vastly larger than what the old Republic senators would have expected or envisioned several hundred years before this guy took over. And they would buy their grain from right here in Egypt, ship it over to Rome, because Sicily, while it was growing, couldn't handle the demands of one of the largest cities in the ancient world. Grain problems would erupt. Food shortages would come around. Inflation would hit, just like here today. And it takes a while. Okay? It creates problems in the world that you're seeing. Absolutely. So just be careful out there. Be cautious. We want you around. We want you around for as long as the Roman Empire lasted, which was quite a long time. All right, this is your old buddy Romulus with Backpack Trader. I'm going back to ancient Rome. I will see you soon. That is all for now.